think it's over because the market is much larger than it was and Bitcoin is not as dominant. So at the margin, the 4-year cycle will have an impact, but not as large an impact. For example, the ETH 2.0 thing is going to create a potential dynamic that's different. So I think the cycles have changed. And I think, over time, these very volatile trends get less volatile. And we saw that with Amazon in its early days. It was like up and down 95%, then 65%, and then it just gets less and less and less because more people are in the network. So it's the same with crypto now. There's 600 million people, 300 million people using it now. So what's happening is the volatility dampens. So, I think the new down 85% is the new down 50, is the down 50 where we are now. So it's kind of like we've had a bear market. We've been in a bear market for a year. Could it go down 65%? Possibly. But, it's unlikely to go down 85%. People have a very recency bias and they only know what they know. And people who've been in the Bitcoin market have only been around, a network adoption model for a decade. So they've only seen a few cycles. But if you go to Facebook, Amazon, Google, they've all had these for decades and you can see how they work. And they tend to lower volatility over time.
Macro guru and former executive in Goldman Sachs, Raoul is calling cryptocurrency the quickest growing asset class in the history of humankind and forecasts behemoth growth of the market by the end of this decade. In his latest interview, Raoul stated several altcoin projects luring thrill and hype will not survive as they fail to amass adoption. While several projects fail in the short run, Raoul foresees an unparalleled adoption curve for cryptocurrency markets over the upcoming 7 years. Hello and welcome to Money Talks. In today's video, Raoul updates about how inflation is stealing money from the crypto market, what Bitcoin maximalists don't understand about crypto payment rails, and his portfolio mix between Bitcoin versus Ethereum versus Solana. So without wasting any time, let's dive right into the video.
I started in 2020 all in on Bitcoin. Then I started shifting towards Ethereum. Then I bought a basket, which included a bunch of metaverse plays, some social tokens, some Layah ones, other stuff. And I've basically kept that. So I don't think I've traded anything apart from buying some NFTs. And then, the only other major switch was I sold most of my Bitcoin for Ethereum about 6-9 months ago.
Yeah.
So
okay.
I'm probably still 85% ETH and then 15% other stuff. I think two things happened. Firstly, price got ahead of network activity. So what happened was there wasn't a lot of new transactions in the network, i.e. the value transacted wasn't going up and the number of new wallets or active wallets wasn't going up. So price went up and the network didn't, and it didn't stick. And the issue was inflation. So why does inflation matter? Well, because the crypto is still a retail network, right? It's really driven by retail. And if you've raised prices on people and wages don't go up as much, they've got less discretionary income. That discretionary income was the dollar cost averaging that went into crypto. And so people stopped because they had to pay their grocery bills or their rent. So that's why it just stopped. So it shows how macroeconomics influences crypto markets in ways that people don't quite yet understand. But that was the big thing that happened end of last year and has continued to weigh on the market this year because network growth hasn't really improved. So we've seen rotations within the market. So we saw people switching from ETH to Layah ones, and we saw NFTs hold their value, stuff as people are reallocating what they've got in the market, generally reallocating ETH. A lot of Bitcoin people, tend to stick with Bitcoin. But a lot of the ETH people reallocated to different parts of ETH, like, NFTs particularly got a lot of attention. The balance of probabilities is that we made the low last year. We retested the low this year. And I think the low is in. But who the hell really knows, right? So, I got the back end of last year wrong, like everybody else. I thought, we were going to get this run and we didn't see it. I think we've thrown a war 8.5% inflation, the Fed raising interest rates, all at crypto. We've thrown Chinese ban, we've thrown so much at it, and it didn't make a new low. Kind of usually that's a signal that the market kind of has found its bottom. And so now we're looking for, okay, what are the upside catalysts? The upside catalyst would be if economic growth starts slowing, we're likely to see then long duration assets, things that tend to outperform in low growth environments. And crypto tends to do very well in that kind of environment, much like Cathie Wood's ARK does, those kind of, longer term assets. So that's what we're looking for as the spark, I think, is a change in structure so people fear inflation less and start fearing growth more. I think overall, this is all great. Using Bitcoin as a payment rail. Now, whether it's for, I don't think it massively helps the Bitcoin network because the use of slots on the blockchain is relatively limited in how Lightning works, but it allows it to use to create faster payment rails for certain things. Because look, let's face it, most people, the purpose of Bitcoin is not to buy your goods, or certainly not now. Maybe in 20 or 30 years' time, the purpose of Bitcoin right now is to hold it. And as a store of value, and the last thing you want to do is buy something, some everyday grocery on it, because it doesn't make sense because the expected future return is so high. So, but using blockchain rails and Bitcoin rails to power a payment system, I think is great, and it's a fantastic development. And the work that Jack is doing on all of this is fantastic news. But I don't think it only at the margin drives active addresses or value exchange, which are the two things that drive the value of Bitcoin itself. So I just don't know. I mean, we don't care if I'm sending you £1 or $1. We don't care what network it goes on, whether it goes on some Ethereum layer 2 or a Bitcoin layer 2. We don't really care. So I think we will be sending money, whatever money, over all sorts of different networks. And the more interoperable this world gets, the more we don't care. You just want your money sent to you immediately. So we're not, Stripe is not really about sending Bitcoin around. It's about sending dollars using blockchain rails. So it's much quicker, dollars or euros or pounds, same as Bottle Pay do as well. That's now owned by NYDIG. So I think that's good. And I don't think it's not a competition amongst blockchains. I think different people can offer different solutions. It's essentially creating like a stable coin element of being able to move money around fast. And that's great. They're confusing what Bitcoin is and trying to impose that onto something else. It's like saying, well, the dog doesn't look like a cat and it doesn't purr, therefore it's a useless cat. Yeah, well, it's a dog. It's as simple as that. Ethereum is just not the store of value. Now, Ethereum maxis will say, well, it's going to be this ultra hard currency. I don't really care. Bitcoin is a better solution for that because of its further decentralization and security of the network. So it does a perfect job. Ethereum is not trying to be that. Ethereum is trying to be the open internet, the Web3, the new layer. So again, I think they interact together, and I think Bitcoin is this collateral base layer. Right now, it's not being used as collateral, and ETH is being used as collateral, but ETH has been used as a lot of collateral for all of DeFi, and ETH staking does that. But that's and Solana is just a faster, cheaper version of Ethereum, and it's less decentralized. So that's a trade-off, and that's okay too. And I don't go, oh my God, Solana, why should that exist? It's ridiculous. It exists because people want cheaper and faster, and they don't care about the maximum decentralization. Bitcoin people care about the maximum decentralization. Monero people care about the privacy. They're all different use cases. They're all just different technologies for different things, and that's okay. I just don't see why there's an argument over, well, why can't Ethereum's not Bitcoin. No, it was never supposed to be. If you're a sovereign wealth fund who needs to store, $20 billion of Bitcoin or of an asset, then you're going to prefer Bitcoin maybe. because of how much security you've got versus other networks. You might take ETH as well because it's pretty decentralized, in the realm of decentralization. It's very decentralized and it has a yield coming soon. So, I can see those two assets being on balance sheets, but Bitcoin is more likely to, just by the nature of what it is.
Raoul Pal also says that what we are witnessing in the market is that it is just not good enough to be a quicker, inexpensive alternative to Ethereum or Bitcoin. As per the Real Vision CEO, cryptocurrency markets could boom by 100 times from present levels and reach a $200 trillion market capitalization, even if they are slow years along the path. Raoul Pal also says that we are at 300 million users globally in virtual assets. Essentially, it is booming at 185% every year. We may see 600 million or even 750 million by the end of 2022. Even if it is crawling at a slow speed, we may witness 500 million users. After a year, it can cross even a billion, a year after a couple billion, and so on. And the pace at which it is coming, people do not comprehend. And the movement from a $2 trillion asset class today to a $200 trillion asset class is by the end of 2022. So what do you think about the Bitcoin versus Ethereum debate? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.